par, right, and get liquid. And so I think these are the transients, but at the end of the day, they're just transient factors, right? If you're buying Bitcoin with a short time horizon for a responsible investor is 4 years. So if you're buying Bitcoin with a 4-year time horizon, this shouldn't matter to you at all. And of course, the right time horizon is 40 years. It's like your useful investment life maybe, and I mean the inspired one is 400 years, right? If you think out 400 years, you'll do brilliant things, right? If you think out 40 years, you'll probably make the right decision. If you think out, like 10 to 20 years, you won't have anxiety. 4 years is the minimum. But, people that are trading with 4 weeks and 4 months, right, they're just going to make awful decisions. They're the ones that probably panic sold it when it traded to 39,000, or they panic sold it when it traded to 16,000 or 20,000 12 to 16 months ago. And they probably bought it for the wrong reason. But ultimately, what we've seen is Bitcoin came public. It's clear that you're going to be able to own this as property for the long term. It's clear that this is going to catalyze a bunch of very positive behavior by other regulators in the world. It's going to accelerate institutional adoption. It's going to embolden the political supporters of Bitcoin. It's going to create a marketing war between various Wall Street firms. We see that going on right now. And it's going to strengthen and empower all of the OG Bitcoin holders, because even right now, people talk about, what is BlackRock bought 6 billion of Bitcoin and all these new ETFs. What have they bought? Like 1% of the supply. Well, that means 99% of the supply and 99% of the beneficiaries so far are the non-ETF holders, right? I mean, there's 100x as much, but if Bitcoin's up $10,000 a coin since this happened, well, that benefit accrued 99%, right? That's a $200 billion improvement in the market cap of Bitcoin. And of the 200 billion, 99% of the 200 billion accrued to people that don't even own the ETF, right? So it's accelerating, institutional adoption, and it's just accelerating Bitcoin adoption and empowering everybody else in the ecosystem to do all the things that they want to do.
Hey guys, I hope you're enjoying the interview so far. I just wanted to let you know, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to our daily 5-minute crypto newsletter, The Crypto Nutshell. It's a daily email that gives you the top expert predictions, any breaking news, and top on-chain analysis, all in a nutshell. We write it up every single day and send it to you for completely free. All you have to do is click the first link in the description, enter your email, and you'll get our email into your inbox every morning completely free. It'll make you a better crypto investor in 2024 and will make sure you stay on top of all the news in the space. But for now, back to the interview. Now, one thing I did want to ask you, I want to take you back to 2011, because many people in the space, especially newer people, they know you because of Bitcoin. But something I think that more people should know, especially people that are newer investors, they should know that this isn't your first rodeo. Back in 2011, you made a huge bet on Amazon, Apple, Facebook, and Google, and you rode the mobile wave on why mobile technology will completely transform the world. You had huge conviction and you made a massive bet, and it turned out to be extremely successful. Now, the same thing's playing out. You have huge conviction on Bitcoin and you've made an enormous bet on it. I wanted to ask you the comparison between that first bet on the mobile wave on Amazon, Apple, Facebook, and Google, and how it compares to your Bitcoin bet. Do you have more conviction in Bitcoin? Do you think it's more transformative a technology than the mobile wave? And back in 2011, if you compare it to Bitcoin today, was mobile tech as misunderstood by investors than Bitcoin is now?
Yeah, I think it's a good analogy. I think if you roll the clock back to that period, we were looking at the digital transformation of a bunch of things in society. I mean, Apple was the digital transformation of devices and communications, and Facebook was the digital transformation of relationships. The idea you could literally monetize someone's relationship with their friends, right? And with Apple, your tape recorder, dematerialized into the phone, and your camera dematerialized in your phone, and then all your photos dematerialized in the photo album. and then your CD collection dematerialized, you know, all these all your files dematerialize. So I always thought of technology like acid. It's just eating away and dematerializing things. Um, and Google just dematerialized every library in the world, and it, you know, and YouTube, you know, dematerialized most video, but also you're looking at the dematerialization of education and entertainment, right? Education, entertainment, you know, information, very profound things. So what are the consequences of that? Well, the idea that you could create one generic device, the iPhone, that a billion people would want, and that you could update and improve over the weekend with a software push. That was a big idea, right? That's a massive crystallization in the economy, whereby what if I told you I could replace 27 billion different devices manufactured by 1,000 different companies that come in 10,000 different form factors that are all analog, that are fixed, that can't be updated. And what if I said we're going to replace all of those companies and all those devices and all that functionality with a single device running one operating system, the iOS, controlled by one company? Well, that would make that company the most valuable company in the world. And that would make that company the most valuable company in the world because that company could create the most value. Because on the weekend, they could give everybody 40 million songs, right? Everybody has, you know, I'm giving everybody a 100,000 album library, and they can listen to any song anytime for the cost of electricity. And I don't have to manufacture 10 billion records or 10 billion CDs. And I don't have to have 100,000 music stores, right? Like it used to be, there were stores and they put CDs in them and trucks rolled, right? We had factories to make them, and we had trucks to deliver them, and we had 100,000 people to sort them and stack them, and we had stores, and we paid for electricity, and people went to the store, Tower Records, and they picked it up. Well, the crystallization in physics, it's where you're collapsing to a low energy state. You know, you're going from water vapor or steam to water to ice, and at each step, energy gets given off, right? And it's a basic thermodynamic idea: energy, heat. But you know, in an economy, energy is money, right? Energy is profit. So when we collapse, when we stopped manufacturing film and cameras and recorders, you know, and phonograph records and CVDs and DVDs and whatever you manufacture, when we stopped that, we reclaimed a huge amount of energy, and that converted to money, and that accrued to the people that most of it accrued to the people that use the Apple product. That's why they became the most famous brand, right? I mean, everybody knows it's kind of cool to have 500,000 photos on your iPhone, right? It's like, and they're all there. So it accrued to them, but a small portion of it accrued to Apple, and that went to their shareholders, and that made them the most valuable company in the world. So in 2010, 2011, I looked at it and I said, well, eventually everybody's going to want this. Eventually everybody's going to have a computer in their pocket. And it's pretty clear it's kind of a winner take all thing. Apple ended up generating all the profit in the mobile phone industry, and everybody else lost money to compete with them. So it wasn't like they had 20% market share and got 20% of the profit. It was like they had the best product. They had 150% of the profit. 150% of the profit, 25% of the market. Everybody else lost money to compete in the space. And, you know, where did they go? Remember what happened to BlackBerry, what happened to Nokia, etc. Eventually, they all just went away. Motorola, if you recall. So, why was I enthusiastic? Well, what I say is the way you make money is when you see a digital trend. Everybody needs it. Nobody can stop it. But nearly everybody disagrees with you. Right? It's like if the majority of people disagree with you, they don't understand it, but nobody can stop it, but everybody needs it. That describes Amazon, right? If you go back and read investment research on Amazon, everybody hated it. You know what they say? Oh, this is an awful retail company. They don't make any money. Well, they kept not making any money while they sucked the entire market up, and now there's Amazon, Walmart, and everybody else is bankrupt, right? 20,000 retail companies fail. You know, one or two, Amazon, you know, Walmart, Target kind of are there, and then Amazon runs by everybody. It's because everybody, you know, who doesn't want to have everything they want delivered to their door in 1 hour for free? Who doesn't want that? Just like with Google, I want to go and I ask a question, I want to answer instantly, quick, and I want every book and every piece of information the human race has at my fingertips instantly. Well, who doesn't want that? Everybody wants that. How about YouTube? Okay, well, it's everything you want to know for free instantly, everywhere in the world. Okay, so everybody's eventually going to need it. Billions. All those YouTube videos, they got like 9 billion views, you know, on the video, right? So everybody wants it. Nobody can stop it. But then again, everybody thought it was a stupid idea, right? They didn't really get it. And the same was true with Apple. It's like people just didn't get it. And like, well, a device that basically does everything you want it to do in your pocket that's, you know, a million times more powerful than the computer in the space shuttle. And everybody said, well, it's too expensive. Remember they used to say, you know, you could buy Nokia phones for like $30. And the iPhone came out and it was $500. And people made fun of it. It's 10 times as expensive. Well, what happened next? Well, Apple raised the price to $750, and the other phones were $20, and then Apple now sells iPhones for $1,500. So Apple keeps raising the price of the iPhone, and all these other cheap phones went to zero because at the end of the day, the point was, it's what people want, right? It's just better. They don't. People used to think, oh, they just want the cheap thing. Just like they'd make fun of Amazon for this or that, but no, they don't. So those companies, they represent the digital transformation of retail, of information, of relationships. They made fun of Facebook, but you know, it's like when 4 billion people or 3 billion people are on a network, it's just so incredibly powerful that you can't stop the thing. These companies are now more powerful than a lot of countries, a lot of national governments. But the key point I'd make is the time to buy them was when everybody laughed at you. You know, back in 2010 to 2012, most people would have laughed at you. You know, with regard to Apple, you know, they would laugh. They would say, well, you know, it's too expensive, and Nokia's got the market, or Motorola this or something. Or they'll never, you know, the telephone companies will control the business. Or they would say, well, the stock is too high, so you should sell the stock, because here's a classic one. It was 5% of my portfolio, the stock doubled, now it's 10% of my portfolio, but my investor mandate is I never want to have any stock more than 5% of my portfolio. So every time Apple doubles, you know, the GigaBrains sell half their position. And so then it doubles again, so they sell half again. So then it doubles again, so they sell half again. So then it doubles again, so they sell half again. So after 10 years, they've got a little bit of Apple stock, and they bought all of the computer companies that went bankrupt. And they did it in a risk-averse fashion. And, you know, again, the key point is diversification is selling the winner to buy the loser. And it's this common Wall Street meme or cliche, and they probably teach you in business school, and a bunch of guys in suits, they will tell you that. But all those dudes in suits that practice diversification, they didn't get rich because they diversified. They got rich because they instilled fear, uncertainty, and anxiety in a bunch of other people who then gave them their money and agreed to pay 2% management fee and give them 20% of the upside. So if you think about classic Hollywood, classic Wall Street masters of the universe, they will manage your money. You know, you're a retiree, you're a doctor, a dentist, you give them your money, you give them your life savings, They charge you 2% a year, and then they take 20% of the upside, and then they tell you that it's too dangerous for you to own Apple. It's too dangerous to own Bitcoin. It's too dangerous to own Google. You can't do that. That's irresponsible. So here's what happens next. You give them $1 million at 2 and 20, and if you actually understand statistics or financial modeling, and then you just take that $1 million and invest it in the S&P index, and the S&P were to go up 10% a year, they get 4% a year, and you get the other 6. Which means that you just gave them 40% of your money. You had $1 million, and you just gave them $400,000, and you got the other $600,000 back. And so, if you ask yourself the question, who are the people telling you diversify? It's the people selling you the diversified funds, or they hold themselves out as these brilliant diversifiers, and what they're really doing is taking all your money, right? And on the other hand, name a billionaire that got rich by diversifying. Jeff Bezos didn't get rich by diversifying. Mark Zuckerberg didn't get rich by diversifying. You know, Steve Ballmer didn't get rich by diversifying. You know, like Steve Jobs didn't get rich by diversifying. Pretty much, you know, Elon Musk didn't get rich by diversifying. Right? You could go on, you know, and like, let's take even Warren Buffett. You know the most profitable trade Warren Buffett ever made?
Apple.
He bought Apple stock. And he made more money on, they bought Apple stock 20 years late, or whatever, and they made more money on Apple than they made on every other stock investment in the history of the company. And they made it in like 5 years. And it was a concentrated position, like by the dominant mobile company, right? And so I think that people are misled, and they don't think about it much, right? If everything, by the way, it's no good to diversify if everything's correlated. For example, you could buy every possible company in Nigeria, but if they're all correlated to the Nigerian naira and the currency collapses, what good was diversification? So you really have to think about this. It's like, I wouldn't say that there aren't successful people that happen to be diversified. I would just say that oftentimes this is a mantra that's brainlessly recited to give people an excuse to not think. And it's you know, it's like, well, I got to diversify, so I own 37 different things. So that means you don't really understand any of the 37 things you own. And I would advocate you should spend 1,000 hours obsessing over each thing you own. And if you're the kind of person that can spend 5,000 hours and spend 1,000 hours on each of 5 things, then, you know, good for you. Maybe you'll end up owning Apple, Amazon, Facebook, Google, right? And then maybe you'll say all 4 work. And that's not so bad. But, you know, I'm skeptical of a lot of the other, you know, ideas that circulate, and they're just kind of mindlessly repeated over and over and over again. So coming back to the question you asked, right? What happened a decade ago was the digital transformation of all those things. It was the digital transformation of information, and it created trillions and trillions of dollars of wealth. And you could have actually made a lot of money if you jumped on that wave. What you have to do is pick the winner, right? There's 1,000 digital retail companies. There's one Amazon. You don't want the Amazon of Singapore. You don't want the Amazon of Nigeria. You want the Amazon, right? So you see, you have to pick that. There's one Apple. There's one Amazon. There's one Google. There's one Facebook. If you picked it, there's one Microsoft. If you pick it, you win. You pick the number 3, you probably lose. And so that was a big wave. But by 2020, that was still unstoppable. Like the Magnificent Seven has been an okay investment. Like if you bought all those stocks in 2020, you probably doubled the performance of the S&P index. The S&P index is up like 45%. If you picked the best 5 companies in the index, well, you double that performance. If you picked the rest had no return. Okay, so there's 493 or 490 companies that don't return anything. They're all losers. There's 5 to 10 companies that are the winners. And if you pick the winners, yeah, you do better than the index. If you pick the index, at least if you brainlessly got some winners. But of course, Bitcoin outdid them by a factor of 3 or a factor of 2 to 3. So why was that? And the answer is by 2020, 98% of the people didn't disagree with you if you said Amazon was a good idea. See, by 2020, most people agreed with you that Amazon was a good idea. Most people thought, well, Google, Apple, Amazon, Facebook, they're monopolies, and Microsoft. Once everybody knows they're monopolies, once everybody knows they're unstoppable, once everybody knows that they need them, then you're not going to get a 10x or a 100x performance anymore, because all the capital is already moved into the market. Now, there's 2 problems with investing in those Magnificent 7 stocks today, in my opinion. And the one problem is everybody knows they're good, and everybody knows they're essential, and so the market is adjusted, and that means that they're not undervalued. The second problem is the regulators and politicians will increasingly target them, their targets, because they're companies. Whether it's targets to unionize, or targets to fine, or targets to regulate, or targets to embargo, or lever, or censor, or, they're just, or tax, they're just targets, and that's challenging. And the third is they're companies. And this is related to the second problem, but it's a much deeper idea, which is a company is a capital structure, and the capital structure has a finite capacity for you to invest in. So, for example, if the stock of a company triples overnight, like Meta doubled the other day, if it doubles, then and it's valued based on cash flows, and then the cash flows have to double. If you double it again, the cash flows have to double again. If you increase the stock value by a factor of 10, expectations for cash generation have to increase by a factor of 10. That makes them even stronger cash derivatives in a period when you have inflationary money. So you're valued on cash flows, the money is losing its value, and so the debasement of the currency strikes at the heart of the value proposition of the company as a store of value. So that makes them increasingly risky and fragile, and that's exacerbated by the fact that there's massive political pressure in the conventional financial environment for them to return their capital to their shareholders. So when Meta stock doubles, they announce a $55 billion stock buyback, and then they announce a dividend. And that's Apple's playbook. Apple has been buying their stock back and dividending out their excess cash. Well, the problem is the company is valued, or the stock is valued almost exclusively on the P&L, or that is to say, the discounted value of the cash flows as expected into the next future, the next decade of cash flows. Now, if they took all their cash and they bought Bitcoin, let's think about like Meta, if they didn't get back to 55 billion. What if they actually bought $55 billion worth of Bitcoin? Now think about that for a second. If they even bought $10 billion worth of Bitcoin and they announced that to the marketplace, Bitcoin would triple. They would have $30 billion in property. It would be going up 20 to 30% a year. So within a few years, they'd have $100 billion in property. If they actually executed the $50 billion buy, you would have $150 billion worth of property within 24 months. And that $150 billion would be accreting at 20 to 30% a year. But let's just say 20% a year. You're going to generate $30 billion of investment income per year, compounding. And so now you end up with a company where the balance sheet is worth hundreds of billions of dollars, not just the P&L. And so most of these companies, they don't have property, so they're relying on cash flows. And does that mean that the store value this decade? That's increasingly risky, right? It's probably the best conventional idea anybody has, but having the best conventional idea is, it's like buying the best building in a war zone. It's like, okay, well, it's the best you could do, but you're still losing. Or it's like finding the most comfortable cabin on the Titanic. the ship is sinking. You have the presidential suite. Good for you. Now I think that's hyperbolic in this case. I don't think the Magnificent Seven are sinking, but I think that when you're stuck in a certain frame of reference, there are just various degrees of mediocre outcome. There isn't winning. In order to win or get an excellent outcome, you have to think outside the box, and that means if you're in a war zone, you're going to leave. If you're buying currencies that are denominated in a collapsing currency, you know, whether it's a peso or a lira or a naira or whatever, you've got to get out of that currency. If you're buying currency derivatives denominated in dollars, forward discounted, and you know the dollar is going to be inflated at 7-8% a year, well, that's your hurdle rate. You're going to have to grow your cash flows faster than 8% a year. Now, how many companies can grow their cash flows 15% a year for the next 20 years? Okay, now you might find some. Now the question is, can you protect them against politicians, foreign and domestic? Right? If your local politicians like you, will the foreign politicians like you, or vice versa? So those kind of investments, they're very fragile, and I think you got to be aware of them. And so I guess that's why I did what I did a decade ago. It paid off really well, but when 2020 came, the entire world changed, and the question is, what's the next thing? Yeah, Bitcoin's the next thing. But Bitcoin is like, I've said it before, it's kind of like Apple or Google in 2010. Misunderstood, everybody needs them, nobody can stop them. But it's a bit better because Bitcoin is an asset class, and so its target use case is store of value for the civilization, which means that there's no reason why it doesn't subsume gold, and gold's worth 10 trillion as a store of value. Why can't it subsume real estate at 100 trillion? Why can't it subsume all store of value property, which gets you to 200, 300, 400 trillion? And the more valuable it gets, the more useful it gets, right? The fundamental big idea, and it's very difficult to explain this to people, but if Bitcoin increases in value by a factor of 100 because people buy it as a store of value, it's 100 times more valuable. Whereas if Apple stock is 100 times higher price, the cash flows in the next 20 years have to keep up. Right? And people that criticize Bitcoin, they say, well, it's got no cash flows. Well, that's not the defect. That's the feature. It's not a liability. It's the fact that it's something that is not valued on cash flows means it's never going to miss its quarterly cash flow expectations.
Machine learning is advancing, but businesses wonder if some machines can keep up. Let's welcome our new coworker, Steph.
Up here, that's a great idea.
One of us had the same ideas yesterday. It's a performance issue, really. I know people push your buttons, but you still have to deliver.
Anything can change the world of work. ADP Assist is AI, informed by workplace data, and designed for the next anything.
I'm a stuffing guy. Stuffing is what holds Thanksgiving together. Don't get me wrong, I love premium carved turkey and cranberry sauce. But if you mess with my stuffing, I'm coming for it. Firefighter approved. And if you want some savings, order on the app.
Right? In fact, it's a reflection of the cash flows that have flowed into it. And so Bitcoin is just a much more powerful idea. It's the digital transformation of capital. Right? It's not digital information, it's digital energy. Right? And energy is matter, energy is capital, energy is property. Right? And so Bitcoin is digital energy. Google and Apple and Amazon, they were all about digital transformation of information. And I think that was the 30 years. It was a 30-year trend. I just think we're kicking off another 30-year cycle. And Bitcoin is this big driver of this digital transformation of energy. I use the word energy because energy is conservative, right? It can neither be destroyed nor created. There's conservation of energy, just like capital. Right, I send you $1 billion, you get the billion, I don't have the billion. right? Whereas when I send you my record collection, you've got the records, I've still got the records. You see? I send you my photographs, you've got the photos, I've got the photos. So information is non-conservative, energy is conservative. Bitcoin represents the digital transformation of capital, right? Most people don't agree. Most people don't even understand, right? Right, the beauty of this is it's not that they understand and they disagree. It's like you say Bitcoin is digital energy, and even the people in the crypto space will disagree with me. They're like, what do you mean? No, it isn't. It can't be. Like, that's not what it is. They don't get it, right? And so that's a paradigm shift. So profound that you can say it in front of someone, and unless you have 100 hours to show them 100 examples and can conduct a Socratic tutorial for them and answer their 100 questions and show them three-dimensional visualizations and then make 100 connections. If you don't have that time, they just look at you, they blank, they disagree, they misunderstand, and so they don't buy. But that's exactly what you want. You want something which can't be stopped. The fact they don't agree and they don't understand, it doesn't mean it's stoppable any more than I start a fire in Chicago and it's burning. It's like you might not understand it's a fire, you might not know fire, you might wish there isn't a fire, but the fire's coming, right? It's not stoppable, right? It's a chain reaction. And this is a chain reaction right now. That's what makes it, I think, such a compelling proposition.
Amazing, and yeah, I think the mobile wave bet that you made in 2011 should be known by more investors because there's so many parallels between it, and I think it's just amazing that it's not your first rodeo and you've done it all before. Now, something I wanted to relate back to, you mentioned Warren Buffett, and we were talking about diversification and how that's people don't get rich. We write to 50,000 people on our email list every day, and the most common question we always get is, am I too late to Bitcoin? And you mentioned when Warren Buffett, his best trade was buying Apple, and he was 20 years late to it. So, big pushback we get is that the cost of living has gone up so much, wages and people's salaries haven't increased at the same pace, and at this point it's impossible for some people to accumulate one whole Bitcoin, and even to get to 0.1 Bitcoin is a stretch at this point. What would be your response to people that think they're too late to Bitcoin, or that they're too late to the party, they see it at 50,000 and they think that the boat has left the port and they're too late?
I think the risk-reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, I would say do your own research. But Bitcoin's 15 years old, so let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could start 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? Was real estate Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in 1995? Was it a good investment in London 20 years ago? 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties, right? It's 15 years late, it's not late. Right? The difference between the winners and the losers is the winners buy something valuable and the losers are afraid. Right? The losers are afraid to buy the valuable thing because it's too expensive. New York real estate was the most expensive real estate.
By the way, I'm paying for our pedicures. And by the way, maybe next time.
People with the Wells Fargo Active Cash credit card prefer to pay because they earn unlimited 2% cash back on purchases. Visit wellsfargo.com/activecash. Terms apply.
State in the United States 300 years late. Right? It's always been the most expensive. Apple Computer was founded, I think, 1976, around then. 15 years after Apple Computer was founded, was it a good investment, right? Check the price of Apple stock in 1993 or 1996. I think in 1998, you know, Michael Dell told the board they should shut it down, give the money back to the shareholders. But the truth is, you know, at many points in time, it was a good investment. I think, you know, as I said, the real key is to understand what is Bitcoin's use case. It's digital capital. Well, how big is that? $400 trillion? Like, how much capital is locked up in real estate, equity, currency, bonds, collectibles, trophy assets, precious metals in the year 2024? Right? There's probably half the value of most residential real estate is the monetary premium. It's the capital. So, like, how do you know this? I give you a little tip. Go to Miami Beach, go up and down the beach, and then count the number of lights on in a condo building on the beach. Or go to Monaco and count the number of lights on. And what you'll find is that 80 to 90% of all of the condos don't have lights on at night. So people have huge amounts of capital tied up in these idle assets. And there's a lot of reasons for it, but one reason is because they feel like their money is safer there. So in the 20th century, people basically bought sports teams. Ask yourself, what do rich people own when they get rich? They bought sports teams, they bought real estate, they bought companies, they bought land, they bought timber rights, they bought oil rights, they bought gold, they bought, you know, bonds. They just bought stuff. Why? Because they knew if they left their money in the bank, it was going to dwindle away. Buy anything. They buy Picassos, they buy art, they buy stuff. So there was never a perfect digital capital. There was never a digital instrument where I could, like, if you were a rich Russian and you had a choice between buying a bunch of real estate in Moscow or buying Bitcoin, well, with ex post facto hindsight, looking back for the last 30 years. Okay, now let's play that out, and you're a rich Nigerian. Now you're a rich, you know, a Turk. Now you're rich in Lebanon, right? If you and we don't have to be rich. You can, anybody with any amount of money anywhere in the world, right? You know, you've got the last 100 years of history. You live in Germany in 1930. What do you want, a building or Bitcoin? You know, you live in Argentina. What do you want? You want to own land? You want to own a building? You want a company? You want Bitcoin? The currency is going to collapse 5 times in 140 years. 5 times, right? Okay, so this is why we want to study history. If you study history, you're going to find that the currency collapsed thousands of times. In fact, on average, it collapses everywhere. Probably it collapses everywhere on average every 50 years in the history of the world, and that's maybe me being charitable. So, is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on one-day notice if you need to? If not, then you're probably not too late, right? So if you go through that exercise, you can't take your building with you, you can't take your bars of gold with you, you can't take the stock shares with you. You know, people for a while, they bought paintings thinking I'll roll them up, but, you know, it might not be the easy to, you know, and the average person can't buy Picassos. They're not quite exactly at the price point. How do you buy $237 a Picasso a week, right? So Bitcoin represents digital property. What's the value of digital property? Hundreds of trillions of dollars. Is it overvalued? Not yet. It's $1 trillion right now. So when it's 100 times more valuable than it is right now, will it be overvalued? Not likely. It's probably still going to be appreciating faster than every other thing you can buy. Why? Because it's better than every other thing you can buy. Show me a hotel you can put in your pocket and teleport. Right? $1 billion of gold is like 3,000 pounds, right? How are you going to move that, right? Right? Give me a company that's going to last through the next 3 CEOs, right? Do you know who the 3rd CEO will be after the one that runs the company now? And do you trust that person? right? The S&P 500, haven't we established there's a 99% failure rate? These are the winners. There's a 99% failure rate to generate shareholder value amongst the 500 best companies in the world. Now, if there's a 99% failure rate amongst the 500 best companies in the world, then what's the failure rate amongst the 100 million companies in the world? And, you know, what's the most successful nation-state currency in the history of the world? Well, if it's the dollar's lost 99.8% of its value in 100 years. Maybe 99.9% of its value. You could debate whether it's 99.8 or 99.9% of its value. Every other currency in every other country lost 100%. So, if you're sitting around wondering, is Bitcoin overvalued? The question is, overvalued versus what? Right? You're going to buy something, right? You're owning something in lieu of Bitcoin. What is that something which is better? Right? That's the real question. Because not selling is buying, but not buying is selling, right? And you basically got a certain amount of economic energy. It's deployed somewhere, right? And the question is, what are you invested in that you think is better? I think everybody's got to answer that question themselves, but you know, like if you owned a football team, like what's the odds that people are just still going to watch football in 250 years? And what's the odds that you can put the football team in your pocket and leave the country? Not high, right? I mean, and what's the odds that, you know, you get attacked by, what if there's some law that says that you're liable for the physical damage and the emotional harm to the football players? And, you know, if someone gets hurt playing football, you have to pay $100 million settlement, right? That happens. Or even better would be, what happens if someone goes to a football game, watches it, and is traumatized by all the violence, and they form a class action lawsuit and they sue you? Mightn't that happen? Happens all the time. Right? Look at the history of opioids, look at the history of cigarettes, look at what's going on right now at congressional hearings around social media. At some point, you'll have trial attorneys suing tech companies because someone used a website and something bad happened to them, right? So there are a lot of risks no matter what you invest in. If you think you don't have risk, you're simply ignorant of the risks you're currently.
Give me 30 seconds to show you the trading strategies that allowed me to become a full-time trader and quit my job 2 years ago, while also designing the lifestyle I love with less than an hour of work per day. In fact, if you've been trading for at least 3 months,
embracing. And I think that once someone understands fully all their range of risk, then your conclusion is, no, it's not too late to buy Bitcoin.
Amazing. And right at the beginning there, you said in 2024 you don't think Bitcoin has ever represented a better risk to reward ratio. Looking out in 2024, like it seems like we have this insane confluence of factors. ETFs launched at the beginning of the year. In April, we have the halving. Correct me if I'm wrong, we have the FASB accounting rules go into effect this year. Then we have the election in November, so it normally means more liquidity. What is your general outlook for 2024? Do you think this is just going to be a complete watershed year for Bitcoin because of this confluence of all these things coming together?
I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it was keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think, and actually, of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 1/10%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because
Get the fuck
the daily
out of here.
volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD, there's still a lot of uncertainty, people still aren't sure, they don't understand digital energy, they don't understand digital capital, they don't understand digital property. There's a lot of debate in the community, is Bitcoin a currency, or is it a property, or, there's massive debate. And a lot of people say, well, it's currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators, they think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it, I can't buy things online with it, it's too volatile. And they think that's a criticism. And so they criticize it, and then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and, or the government will ban it, or it's not as good as the dollar, or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right? The people that criticize it, there's no way Warren Buffett spent 100 hours studying Bitcoin, right? There's not likely that everyone that criticizes it spent 100 hours studying it. They haven't read the Bitcoin Standard. They probably haven't listened to 20, 30, 40 hours of podcasts, right? So the critics are misinformed, and the mainstream investors, they have all the money, right? There's $900 trillion of wealth out there. There's only $1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education, right? As Bitcoin's going to go up, and as the price goes up, more people are going to get asked, and they're going to reject. They're like, stop asking me. I hate talking about this. Like, we don't like it because it's like gold. It doesn't generate cash flows. They don't understand. If you don't understand perfect money, right? What's wrong with gold? Gold has emissions. Gold is inflationary. That's why it doesn't work. If you don't understand that, then you don't understand why digital gold is better than gold. So you don't understand Bitcoin, you don't understand money, and then you haven't really thought very deeply about property theory or capital theory, so you definitely don't understand digital capital, which means you don't understand digital energy, which means that when someone asks you gotta buy it, your answer is, of course I'm not gonna buy it, I don't get it. But what I say to people, right, like, if everybody read all these books, if they listened to all your podcasts, if they listened to all my podcasts, if they thought about it for a few hundred hours, tomorrow they would wake up, they would all buy Bitcoin, and Bitcoin would be $5 million a coin. And then we'd be doing this podcast, and you would say, Mike, all the comments from all my followers are, is it too late? And I would say, well, it's too late for you to get insanely rich. You're not going to get 100x, right? If you buy Bitcoin at 50,000 when it's 5 million, you're going to be bragging to your kids that you got 100x your return, right? So it's going to be too late for that. But it's not too late to buy it, because it's still better to buy the thermodynamically sound digital asset, which doesn't have all of the liabilities of real estate, stocks, or bonds. It's still going to go up in value faster than the S&P index. It's still going to be a better after-tax return than owning sovereign debt. It's still going to be better than owning physical property subject to acts of God, force majeure, and all the other physical limitations. So it's still going to be the best investment. It's just not going to be the investment that got you the 100x return that you were going to brag about. And so there's no reason to worry, right, or fret. You don't want people to figure this out, right? Like if they figure it out, you have 10 years during which you can work and you can buy Bitcoin while everybody else disagrees with you and doesn't understand it because they're intellectually lazy or they're a different generation, right? So that it's like me saying it's 1905 and in 15 years everybody's going to have an automobile, and now you know. Okay, well, you have 15 years to get rich in the automobile business. Figure out, are you going to set up the dealership in New York City? Are you going to start a company? Are you going to be a salesperson? What are you going to do? You have 15 years. Figure it out. This is better than that. But this is a 10-15 year head start. I had this analogy. It's like you could be working at a McDonald's. You could be working for $10 an hour, right? But if you're sweeping the $10 an hour in an asset that goes up by a factor of 100, you're getting paid $1,000 an hour. Okay, so how long do you want to work at $1,000 an hour? Well, you want to work at $1,000 an hour as long as you possibly can, because once people figure it out, then you go back to your $10 an hour job, right? So we're in the gold rush period. People are, when they think about it, they're going to realize this is the period during which everybody in the world started to realize Bitcoin is digital capital, and there's a digital transformation of money, and that you want to hop on top of that. You want to exploit that, and there's 1,000 ways to do it. Maybe it's just work really hard at your job and buy Bitcoin. Maybe it's start a company. Maybe it's do something different. You decide, right? But I don't ever regret any stacking I did. I mean, we bought Bitcoin at, below 10,000. We bought Bitcoin probably above 60,000. I mean, at the end of the day, we never know when the world wakes up, gets rational, and then it runs through the all-time high, and then we regret not having bought more. I would encourage anybody that thinks maybe I'm too late. I mean, I think I would say, well, maybe you just haven't studied this enough, right? You don't give me your money if you're not confident. Give me your time, And if you don't want to invest the time, maybe you don't care about money that much. It must not matter to you that much. If it matters to you, then you spend enough time to figure out whether I'm right or whether I'm wrong. And there's plenty of information out there for you to come to your own conclusion.
Amazing. And just finally, I want to be super mindful of your time, so I only have one question left. And I'm actually going to take it away from Bitcoin and crypto and take it a bit more broad. Michael, you're clearly an incredible, successful person.
Hi, I'm Mike Rowe. I'm in a vault, surrounded by billions of dollars of solid gold. That feels pretty good. I've spent the last 3 decades working my tail off, and now
You've taken huge bets throughout your career, and you have massive wins over and over. You've clearly learned a ton of lessons, and you have a huge amount of insight. Let's say there was a young entrepreneur out there, say, just randomly, he was 26 years old. If you could give one piece of advice on what to focus on or what tips you would give if they wanted to have a degree of your success, what advice would you give?
I would say in every generation, you have to consider the transformational technologies that remake the world. You know, whether it's the internal combustion engine, or whether it's the computer chip, or whether it's the internet, or whether it's the airplane, or whether it's the piano, you know. Figure out, or the electric guitar, right? What's the transformational technology? I rather think right now it looks like the transformational technologies for the next 20 to 30 years are digital intelligence, that is AI, and then digital money or digital energy, which is Bitcoin, right? And the idea that, you know, you can embed digital intelligence into a car, a plane, a drone, a robot, a website, a product, a service, an AI, that's a big idea, and certainly there are going to be massive fortunes made, and if you understand how to embed digital intelligence, right, there's going to be a demand for that. And with regard to digital energy, right, the idea you can embed digital energy into a product, a service, a website, a company, a country, you know, an institution, right, is a big idea. So you ought to think about how you might take advantage of that. Now, there may be other things, right, in the domain of medicine or physics or the like. I'm not an expert on all. I mean, these are two obvious transformational technologies. I would say pick the thing that you love, the thing that you're most interested in, and then I would say focus. Because the most common mistake I think people make is, well, there's two mistakes. One is they pick the last generation technology, right? The thing that made your father or your grandfather or your great-grandfather famous, successful, rich, powerful, right, is probably not going to work for you. You know, you're not going to fight the next war with the same weapons you fought World War II with, and they didn't fight with the same weapons they fought the Civil War with. And you're not going to get rich the same way John D. Rockefeller got rich. So don't try to do what's been done. It doesn't matter how hard you work. No amount of work, right, is going to allow you to overcome a technology disadvantage, right? Nobody cares how hard you work if you're working with a hammer, trying to hammer your way through a mountain. So that's the first thing you don't want to do. But the second thing is, oftentimes people, they find that technology and they have a modicum of success and they get going on that platform, and then they declare victory and they think they take that for granted. So then they go to find the next success. So they want to conquer the second thing, and then the third thing, and then the fourth thing, and then the fifth thing. And what happens, it might be something as simple as you're successful on YouTube, and so then you decide you're going to do TikTok. But TikTok is different than YouTube. And so, you know, you find yourself basically creating mediocre TikTok things, and then your YouTube content gets mediocre too. And then someone else, you know, offers you a third thing, and you decide that's what you're going to do. And pretty soon you're doing three things, and everything's mediocre. And gradually, you know, your customer base, your fan base falls off, you know, your support falls off because you diluted your focus. I think here's the phrase I would leave you with, right? Nobody fails because they pursue bad ideas to the detriment of their good ones. They fail because they pursue good ideas to the detriment of their great ones. Like, figure out the one thing that you can be great at, and then don't make the mistake of diluting.
We've got about 6 years before everything changes, and we thought the bank was safe, we thought our house was safe, but none of that's true. And the moment you put your money and your savings in the bank, you don't own anything, and your future self is getting poorer by 11% every year, and that's a problem for financial security and wealth creation. But I know where the opportunities lie, and I've got answers.
So could you explain it to me through the context of this?
Okay, so
Raoul Pal is one of the most influential voices in the ever-changing world of modern finance.
Unpacking the secrets of crypto.
how to build wealth in an uncertain future. People know their futures. And they can't look back. They have less savings, debts from university. The first generation, won't look back.
So what advice would you give to set myself up for?
Hey everyone, in this guide we'll teach you how to use TradingView's smart AI indicators that have helped us build a crypto portfolio that has already grown over 15 times since the beginning of this year. Now, let's get started. Now, about a month ago, after TradingView officially announced their partnership with OpenAI, the creators of the well-known ChatGPT, they integrated smart AI into their charts, which is now available in developer mode. These AI-powered tools can accurately predict coin movements by analyzing multiple factors. They help you to see which coins large investors have been accumulating over the past few years to potentially drive them to the moon, and which ones, well, might not be worth buying to avoid becoming excess liquidity. It will teach you how to use the indicators that professionals rely on to find so-called meme coins that can significantly boost your portfolio. So with that, dive into the guide. Alright, step 1. You're going to need TradingView on your PC. If TradingView is already installed, let's skip the step. Now you can find the desktop app by clicking on the More button in the top menu on the official website and selecting Desktop App. The installation process is super simple and takes no more than just 2 minutes. Step 2. After installation, update your TradingView version to enter developer mode. Now, in order to access the AI functions, you will need to enter developer mode by using the command line on your computer. The easiest way to open the command line is to press Win plus R, type CMD, and hit enter. You can also find command prompt through the start menu. Now, after we've opened the command line, copy the text that I'll attach in the description of this video down below, paste it into the command line, and then press enter. The update process will start immediately. It may just take a few minutes. After the update, you'll see a message in the command prompt indicating that the update was successful. After that, restart TradingView. Great, and as you can see, the interface has slightly changed. We've now entered developer mode. And we're ready to do some research using AI tools. I'm going to show you how to do that. So let's start with our favorite token, SUI. According to insider information, the entire circulating supply is in the hands of funds and market makers. Open the SUI USDT pair on trading. As you can see on the chart, AI has marked to which this token is expected to pump in the near future, along with the probability of reaching these targets. 100% probability indicates a rise in $7, while the orange chart shows that there is a 33% probability of an increase to $50. Even though it shows a 100% probability here, it is still an AI tool that occasionally makes mistakes. However, this token is worth considering or for example, let's take a look at how things are progressing in Solana, which is unlikely to show significant gains in this one. But open the SLO USDT. As you can see, according to the indicator, there is a 70% probability that Solana will drop to around $70 in the near future, and only a 15% probability of rising to $250. You can see that the token is currently in distribution phase. That means that whales are holding the price and selling their tokens. So if we buy Solana now, we're likely to become extra liquidity for them. So we'll skip the point. In this case, we've already assembled a portfolio of 6 promising tokens for the next bull run, which we expect to happen by the end of this year. Do your own research using AI charts, and we'd love to hear about your experiences in the comments below. With that, thanks so much for watching. If you found this content useful, please subscribe, like, hit the dislike button. All your reactions help the channel to grow. Remember, the market is full of opportunities like this, and just a few clicks away. We'll see you in the next video.
Download our award-winning mobile app and start trading on the move. Introducing a crypto and FX trading account that's as portable as your favorite playlist. Attractive spreads, price alerts, and the ability to fund your account instantly. Apply now.
Can I show you something that kind of messed me up? This is a ribbon that represents 100 years. And depending on how old you are when you're watching this, you've probably already lived about a third of your life. So this is gone. And unfortunately, most people don't make it to 100.
100 years old, we only make it to about 80. So we probably won't see this side of life, which unfortunately means this is how long you have to live. And unfortunately, most people will spend this much time working, doing something they hate, missing their kids growing up, living paycheck to paycheck, tens of thousands of dollars in debt, one emergency away from having their entire savings wiped out. And this isn't hypothetical. This is the life of the average American, but I guarantee you, it won't be yours if you're willing to try my plan for the next 10 days. Why am I so confident? How can I make such a confident statement? 15 years in digital marketing, worked with some of the largest franchises in the world, Kia, Dave & Buster's, Orsтерio, Massage Envy, consulted and trained a couple Fortune 500 companies, Keurig, Dr. Pepper, Procter & Gamble, keynoted over 100 different top-rate business events across the globe. My advertisement's been seen over 1.2 billion times, and as a result, 185,000 students in 75 countries. Our last graduation, I rented out the entire San Diego Padres Stadium. I had my friend David John from Shark Tank and my lad, Nancy Yossi, and this year, I'll have my friend Alex Hermosi there and a couple other surprise guests. I share none of this to brag, but to say, I guarantee you what I'm about to show you, when implemented correctly, can make the 4-hour...
Sui and its corresponding ecosystem are on fire right now. If you're anything like me, you've been following, you've probably had some difficulty keeping up with everything that's going on in terms of developments, in terms of updates, in terms of impressive announcements and partnerships. They've been keeping busy. The SUI token had a spectacular September, and over the last 35 days or so, it saw a 126% increase. And while I'm recording here as per CoinGecko, it's already ranked number 25 by market cap. And because of the classification differences, number 19 on CoinMarketCap.com. It also recently increased its TVL to $1 billion. We're now above $1 billion, but that represented a 70% increase over the course of just 1 month. And as for TVL rank across all chains, that puts Sui into the number 9 spot. The number of daily active users recently shot up by 3%.
No way, man.
And so we've made this comparison before. In a lot of ways, 2024, as we're entering the 2024-2025 bull run for Sui, looks a lot like the 2021 bull run did for Solana and the Salto. We're going to ask the question today, how many Sui tokens do you need to invest today in order to become a Sui crypto millionaire at the height of this bull run?
All fucking headshots.
Welcome to the channel. My name is Maddie and this is Altcoin Buzz. All the best of luck if you choose to invest. I genuinely wish you well. You just got to remember that I'm not a financial or investment advisor. By extension, this video is not official financial or investment advice. Let's zoom out a little bit, broad angle perspective here for just a moment and ask the question, what is Sui? Just in case you're uninitiated. Well, Sui launched last year on the 3rd of May, so May 3rd, 2023. That means it's a fairly new layer 1 chain. Sui's team used to work on Diem, that is the abandoned blockchain project by Meta or Facebook. It was kind of their stab at their own sort of sovereign currency. You may remember that. However, one thing that they took with them from the Diem project is Move. That is the coding language that they developed there. And Move sets itself apart from other programming language for various reasons, but primarily because it's an object-centric chain. Objects make asset management easier, in fact. If you're a programmer or maybe just more technically inclined than most and you want to find out more about these objects and Move as a programming language, you can check out this article on our website, altcoinbuzz.io. I'll also link to that below in the description. But getting back to Sui as a project, during its first year, the chain had a pretty quiet period. But during the last couple of months, as we've seen, Sui has exploded, especially during September of this year, so last month. The marketing team went so far as to rename the entire month Sui Timber, and in this case it was justified. There's a good reason for them doing that. One of the major reasons, and what got us especially excited, was the pre-order list for the Sui Play 0x1. This is the first Web3 native handheld gaming device, and just the pre-orders alone actually set all kinds of records with regards to this categorization of electronic. It did really, really well.
And then back in May, SUI launched Misty SETI. This is an upgrade to their consensus mechanism. It made it the fastest chain around, and that means it can now confirm transactions within 390 milliseconds. In other words, almost instantaneously. And looking ahead, although not that far ahead, just a few months to Q1 2025, SUI is going to launch Walrus. This is a decentralized storage platform, kind of like Filecoin, and it's going to have its own native WAL token. That's WAL. Like I said, there's a lot of news. That's just kind of scratching the surface, really, of the news that we can highlight here. But for the purposes of just defining the project, giving you a bird's eye perspective of SUI, that's what it's been up to. That's what the team has been doing. There's a lot of other stuff in terms of previous coverage that we've discussed in the past. You can check that out if you want. But I think that we've kind of defined the project, what they're doing, what they're all about. Let's move on now to some technical analysis, some TA for the SUI token. And we have to consider the fact that its current all-time low was 36.4 cents. That occurred on the 19th of October last year, just about exactly a year ago. The most recent support was at 53 cents in August of this year, August 2024. But it doesn't look at the moment like SUI is going to drop to 53 cents anytime soon. There could always be a black swan event in crypto, so I'll never say never. But the fact is, if you bought SUI below $1, you did well. You're pretty much, you've doubled your money by now, possibly better. Now, we're down slightly on the day, just off of all-time highs recently, at $1.99 right now. That's down nearly 5% on the day. The current resistance really sits right now at 2.
Hello everyone and welcome back. Sam here again, and today I'm going to share with you a remarkable arbitrage strategy for XRP that I have personally been using for the past year. I'll explain to you why I believe it to be the most effective way to generate substantial profits regardless of market conditions, whether the market is bullish or bearish. So let's get started. This strategy capitalized on the increasing popularity of XRP, which skyrocketed after its developers successfully defended themselves in a court case against the SEC, resulting in XRP being officially recognized as a non-security token early in 2024. The surge in popularity has significantly increased the volatility of the XRP to USDT trading pair, leading to price discrepancies between different platforms as high as 90%. We'll use these price disparities to generate our profits. To find platforms with the largest price differences, we'll be using XRP Price, the official monitoring tool created by the XRP developers. I've been using this tool for research since 2021, and I found that XRP Price always has the latest data from all the major exchanges. You can find the link to XRP Price in the video description now. Let me show you using my own example how this strategy works. Step 1, go to XRP Price website. Scroll down to the XRP market section, then click on Price to sort platforms by price, from highest to lowest. As you can see, on some platforms, the XRP rate is significantly higher than on others. Just take a moment and compare the price with the trading platform. Step 2, select the platform with the highest XRP price is currently available and sign up there. I recommend always double checking the prices before you start your arbitrage cycle, as they can change throughout the day. Step 3, purchase XRP at a lower price from any high liquidity platform. In my example, I bought 17,045 XRP with a $15,000 budget on Binance. But of course, for beginners, I recommend starting with a smaller amount during your first few cycles. Step 4, transfer XRP to the platform you selected earlier in step 2. Make sure to include the destination tag in the transaction. Step 5, after the XRP arrives, go to the spot trading page on that platform, select the XRP USDT pair, and sell your XRP there at a higher price to complete the cycle. In my example, I sold 17,045 XRP for 16,550 USDT, which is approximately 9.5% higher than the purchase price on a high liquidity exchange. After deducting the exchange fee, the final balance was 16,481 USDT, resulting in a profit of $1,481. And it only took me 10 minutes to do this cycle. That is an incredible profit, right? So now we can repeat the cycle. Just transfer the USDT back to the platform and start the process all over again. For faster transactions, I recommend using the TRC20 network. The fee is just $1 and it's quicker than other networks, making each cycle even more efficient. As you can see, this arbitrage method is super simple, and even a beginner can profit from it using the right tools. Unlike futures trading, there's no risk of liquidation. You just buy low, sell high, and profit is completely predictable without depending on chance or market unpredictability. That's all for today's video. So give this strategy a try and find out your own arbitrage rates. To find the best rates, use monitoring tools like XRP Price or any other. and I'd love to hear about your experiences in the comments below. If you found it informative, smash that like button, and if you want to stay updated on new arbitrage companies, be sure to subscribe and click the notifications bell as well. Thank you very much for watching, and I'll see you in the next video.
I don't fucking get this game, bro. I swear to God.
We are experiencing a major shift in the market, especially from last week, because retail investors are fully back, and you don't have to take my word for it. Just look at, for example, the top coin rankings by performance over the past 7 days. You see we have XRP, Cardano, Stellar, Polkadot, Tezos, Sandbox, Decentraland, Algorand. All of these legacy coins, the coins that popped a lot in the 2021 cycle, but are not popular on crypto Twitter, these are the strongest performers over the past 2 weeks. In the meantime, the crypto natives and the degens on Twitter are still fighting in the trenches, and they are trading meme coins on Solana, but they can't even get their coins above 20 million in market cap without dumping and then having a new coin being born from 0 to go to 10 to 20 million again. It's really PvP in the meme coin trenches now. So I think we are just about to have a major wave of liquidity coming into the mainstream coins from real everyday investors who have not checked in on their crypto portfolio for 3 years. So in this live stream, I will go over exactly how to identify these coins with the main criteria. I believe I have listed 7 on a spreadsheet. And I'll also give you my top picks, taking into account these criteria and the ones that I see have the strongest potential to continue to run in this bull run. So make sure to watch till the end, as I'll give you my top picks in that format. And if you have any questions, please leave them down in the chats, and we will do a Q&A at the very end.
Look.
Okay, so welcome back.
Introducing Ironbeam, the best choice for futures trading. Ironbeam is the industry-leading broker catering to traders worldwide. With the free Ironbeam platform and free real-time data, you can trade the most popular futures contracts.
Ever since BTC started hitting new all-time highs, everyone has been wondering when altcoins will come. So far, only a few coins and tokens, and a couple of meme coins have seen really big gains. And this has led to speculation that altcoin season may never come because the flow into the spot Bitcoin ETFs won't find their way into the rest of the crypto market. However, there is much more.
Your mom's story.
So today we're going to explain what altcoin season is, why it hasn't happened yet, when it could start, how to tell that it is starting, and which altcoins you watch. Miss this, you'll miss out. Now the reason why I want to begin with what altcoin season is because there doesn't seem to be a universal definition. Many believe that altcoin season just means a period when lots of altcoins are pumping. As such, you could argue that altcoin season is already here because, well, lots of altcoins have been pumping. Clearly, this definition misses the mark, so allow me to propose a more accurate one. An altcoin season is a prolonged period where most altcoins significantly outperform BTC. This is something that can be easily measured by comparing an altcoin's price to BTC, such as, for instance, BTC. If you look at the BTC pair for most altcoins, you'll see that they haven't actually been performing very well. To be clear, this doesn't mean that they haven't pumped in fiat terms. It just means that they've pumped less relative to BTC. ETH is the elephant in the room in this regard. It continues to fall against BTC. This has been concerning for many crypto traders and investors because, historically, BTC rallies are followed by a rotation into altcoins. In plain English, After BTC pumps, traders will take a portion of their BTC profits and invest them into altcoins, resulting in a period where most altcoins outperform BTC. Historically, this capital starts by rotating into ETH, then into other large-cap altcoins, then into mid-cap altcoins, and finally into small-cap altcoins. It goes without saying that this rotation isn't exact, but it follows the logic that, as markets keep rallying, people tend to invest in riskier and riskier cryptos. This time around, however, there has been minimal rotation into ETH, evidenced by the weak ETH-BTC pair I mentioned a few moments ago. Not only that, but it seems that these capital flows skipped over all the other mid-caps and small caps and went straight into speculating on micro-cap meme coins. Now, make no mistake, there are some altcoins that have outperformed BTC, with Sol being the most notable. Besides Sol and a few dozen micro-cap meme coins, however, most other altcoins have underperformed BTC, including ETH. This means that altcoin season arguably isn't here yet. Now, as I just hinted, the smaller the market cap, the more riskier the crypto is. This is because when a crypto has a smaller market cap, it can rally higher and faster than cryptos with larger market caps. The catch is that it can also crash lower and harder than cryptos with larger market caps. It's risk versus reward. Naturally, the 100x gains you've heard about and you'll dream of are only really possible with altcoins that have smaller market caps, hence why altcoins is such a big deal. But it's becoming clear that this crypto cycle is different from previous ones. That could have big implications for altcoin returns. So, why are we not seeing the same rotation we saw in previous cycles, and when will altcoin season come? Well, before I give you the answers, smash that like button if you're enjoying the video so far, and subscribe to the channel and ping that notification bell so you don't miss the next one.
Get in here! Take a seat, sir. Go on. Just tell me about these anxieties you've been experiencing. When did they first manifest themselves?
Well, you know, I think they first started when I got into crypto. I started to worry about all kinds of stuff.
Such as?
Well, I became anxious that I was spending, way too much on exchange fees. Like, every time I made a trade, boom, more precious crypto go on. And I felt like I was missing out in other ways too.
What other ways?
Well, for instance, why didn't I get a sign-up bonus when I registered on an exchange? I mean, come on, they should be welcoming me with open arms.
That's a common feeling for many people in crypto.
Yeah, go figure. And I kept getting told to buy a hardware wallet to keep my crypto safe, but, some of those things ain't cheap, huh? What's my guy to do?
Well, there's a few of those concerns.
You mean medication?
No, I mean like the Coin Bureau Deals page. It is crazy discounts on top crypto exchanges. It offers sign-up bonuses of up to $60,000 and it has discounts on the best hardware wallets too.
You mean I just go to the Coin Bureau Deals page and I can see what?
Yeah, absolutely. Just head down and see the link down below.
Okay, I'm on my way.
Now, let's start by acknowledging the reason why this cycle is different, and that's the spot Bitcoin index. As I mentioned in the introduction, some believe that these spot Bitcoin ETFs are why we haven't had an alt season. That's because it's not possible to rotate out of the ETF to altcoins, at least in theory. In practice, it is quite possible that some spot Bitcoin ETF investors are cashing out their gains, depositing them into a crypto exchange like Coinbase, and buying altcoins. The caveat, though, is that most spot Bitcoin ETF investors are not retail investors in the classic sense. They're experienced institutional investors. This means that their altcoin preferences are likely to be very different to those of the average crypto user. If you watched our last Solana update, you'll know that there's been significant institutional demand for Sol. This could explain why it's been one of the few altcoins outperforming BTC. But if you watched our crypto market update, you'll know that the crypto market isn't just made up of institutional investors buying the spot Bitcoin ETFs. In other words, you haven't taken anything away from the crypto market, you've just unlocked a new main character, so to speak. Now, the other main characters in the crypto market are crypto whales, which have been the primary drivers of the market up to this point. It's the rotation out of BTC into altcoins by crypto whales that's caused previous altcoin cycles, and retail investors that have caused altcoins to hit their blow-off tops. Logically then, the absence of an alt season is not due to the spot Bitcoin ETFs, but due to crypto whales and retail investors. As we mentioned in that market update video, we believe that crypto whales haven't been rotating into altcoins because there are no retail investors around to buy them. Case in point, there are dozens of statistics to suggest that retail investors are still waking up to the crypto rally. These include the retail trading volume on crypto exchanges, the popularity of crypto exchange apps, searches for crypto-related terms, and even the views on this channel. These metrics are still far below the levels that would suggest that new retail investors are entering the crypto market en masse. And the key word here is new retail investors. There are millions of retail investors from past cycles who are still around, back sooner, but we're missing all the newcomers. This is extremely important to point out because for altcoins to really pump, we need what my friend Ben Cowan refers to as the marginal buyer. Put simply, we need new people for our altcoin bags to pump, probably because most of us have already allocated as much as we can to our favourite coins and tokens. In the absence of these new people, there's not that much for us to do except to speculate on meme coins. And it's quite possible that the meme coin pumps have been coordinated by the crypto whales. They probably know that the only retail investors around right now are experienced enough to So, now that we've assessed why altcoins seem to be here yet, the logical follow-up question is, when will it come? The short answer is that it will come once there are enough retail investors paying attention for crypto whales to start rotating out of BTC and altcoins.
From fucking where?
The long answer, however, is a bit more complicated, and it requires going back in time to the previous cycle. Of course, when most of us imagine the next altcoin season, it looks similar to what we saw in the previous cycle. The problem is that what we saw in the previous cycle was different too. We locked billions of people in their homes because of a global pandemic and gave a few hundred million of them some extra spending money. When you combine these two factors, you get rampant speculation in stocks and crypto. Today, the backdrop couldn't be more different. In almost every country, interest rates are the highest they've been in decades. In most countries, the unofficial inflation rate is in the double digits. Some countries are in recession, with many others close to it. Most importantly, however, the average person is reportedly taking on record levels of debt in order to get by. To be blunt, which literally is the opposite of the conditions we had during the previous alt season. Now, the silver lining to this is that the longer these conditions continue, the more likely it is that governments and central banks will intervene with similar kinds of stimulus. Never mind the possibility of an existential shock. What this means is that there should come a point where we get a similar backdrop to the one we had during the pandemic in terms of fiscal and monetary stimulus. Now, exactly when is up for debate, but it will probably require what I noted a few minutes ago, some existential shock that justifies stimulus. It's safe to say that crypto and most other assets would crash in the event of such a shock, additional banking crises notwithstanding. Assuming history repeats, the shock will be followed by a few weeks of suppressed price action, and then an explosion to the upside as the stimulus hits the markets. On that note, if you watched our more recent crypto market update, you'll know that BTC lags liquidity, aka out of markets, by about 6 weeks. This means that it would take roughly 6 weeks for BTC and altcoins to start rallying after we experience a shock and a response. Again, this assumes that the shock will come. the worst case scenario for altcoins would actually be if the current conditions continue. Interest rates remain high, inflation keeps rising, recessions keep coming, and retail debt keeps piling up. If this happens, the next alt season may not be as big as expected. Moreover, it's easy to forget that the structure of the crypto market has changed since the last cycle, and not just because of the spot Bitcoin ETFs. Regulations in the US, UK, and elsewhere have made it harder for retail investors to access the offshore exchanges where the most speculative altcoins can be found. And in the case of the EU, it's going to be very interesting to see how much its upcoming stablecoin regulations will change the crypto market. In case you missed the memo, USD stablecoins will effectively be banned by the end of the year. This could likewise limit altcoin availability for retail investors. So, with all that in mind, we can address the question of how to tell when altcoin season starts. The short answer is to watch all the indicators I mentioned earlier. This means retail trading volume, crypto exchange app popularity, Google searches, and yes, views on channels like this one. When you start to see all of these indicators rising, then chances are alt season is about to begin. Believe it or not, but you could make the case for this today. Search terms for things like buy crypto are starting to pick up for the first time in years, but are still far from their previous highs. The thing is that it's hard to say whether this is the beginning of a new alt season or one of the few speculative waves we tend to see leading up to it. One way to figure this out is to look at how crypto projects are marketing themselves, and particularly if they're making big announcements. Not surprisingly, it appears that most crypto projects tend to make their biggest announcements when more people are paying attention. We've even seen a few instances of crypto projects delaying big updates and announcements when there wasn't enough interest from potential investors. Obviously, lots of crypto projects have been making big announcements lately, and this is another indicator that altcoins have started. However, there have only been a few instances where these announcements actually translated into speculative buying, indicating a continuing shortage of retail investors. So, once you start to see lots of crypto projects making big announcements and their coins or tokens pumping a lot in response, that's when you'll know that retail investors have started arriving. And when you start to see these big altcoin announcements on the mainstream news, it's probably close to the top. Funnily enough, a few of these big altcoin announcements have also been showcased by some mainstream media outlets. And I'm sure some of you have experienced other top secrets, such as friends and family asking you about what's going on in crypto, or worse, how to buy meme coins. Even in these cases though, if people aren't putting their money where their mouth is, then it doesn't count. If mainstream reporting of altcoin news isn't causing a significant pump, and your friends and family aren't aping in, then it's not exactly an alt season. Remember that many of them have altcoin bags too. Another way to know that an alt season is about to happen is to assess whether these indicators are flashing at a time that an altcoin season would be likely to occur from a cycling perspective. This is admittedly tricky to assess with the spot Bitcoin ETF.
Man, get the fuck out of here!
For context, crypto follows a 4-year cycle. This means that we should be in the early 2020 phase of the previous crypto cycle, when prices were starting to creep up and experienced a flash crash because of an existential shock before going higher. However, it's possible that we're on an accelerated schedule. Specifically, we could be closer to the late 2020 stage of the crypto market cycle, and not just because of the spot Bitcoin ETFs. By this point, there are millions of people who have been through two crypto cycles in 2017 and 2021. They know how the story goes, and they know what comes next. The practical effect of this is that we won't be waiting a year for altcoins to start, as was the case in 2020. Instead, it could just be a few months. But again, this assumes that we're on an accelerated schedule. Crypto could still be on the same schedule, which just means that, well, we're all early to alt season. So, this brings me to the big question, and that's which altcoins you need to watch this season. I'll start by saying that if we are indeed all early to alt season, then it's probably the perfect time to start accumulating. That said, this is not financial advice, and it's quite possible that it's the worst time to start accumulating. So, with that disclaimer out of the way, the altcoins you need to watch this season are those that will be the most accessible to retail investors. This ties into what I mentioned earlier, and that's the structure of the crypto market. It looks like most retail investing will happen on onshore exchanges, like for instance Coinbase. If this ends up being the case, then it may be prudent to focus on altcoins on Coinbase. This relates to another thing I mentioned earlier, that's market cap. The smaller the market cap, the bigger the risk, but the bigger the reward. And picking a crypto with a low price tag will help too. That's because most retail investors believe that a low price tag means that a coin or token could pump more, when it's actually the market cap that really matters. So by combining a low price tag with a low market cap, you end up with some solid fundamentals, or as some influencers like to say, pumpamentals. But being listed on Coinbase and having a low price tag and market cap is not all the ideal altcoin needs to have. It also needs to fit into a bullish narrative and have a use case that the average retail investor can understand and make into. You can refer to our video about bull market narratives for help there. Now, if you want to be extra sure that the crypto you picked is the right one, you need to research its tokenomics. That means how many coins or tokens will come into the market in the future. Because the last thing you want is to buy a promising altcoin only to get dumped on by the team and their VC bankers. And if you prefer coins and tokens that are less volatile, but still likely to do well, then you should consider picking a large altcoin. To be exact, you need to pick a smart contract cryptocurrency that most of the promising hedges are traded in. Hint, we mentioned a few of these cryptos earlier in the video. And finally, you need to realize that if you do get into a promising altcoin at a good time, then you may be better off holding it for the longer term. As many members of the CoinZero team can attest, they would have just as much money today if they had just held their altcoin bags through the bear market. After all, crypto is fundamentally creating new systems, be they financial or otherwise. While most of these systems and the projects within them will go to zero, some of them will stick around. The ones that do could be worth trillions of dollars someday, just how BTC is worth north of $1 trillion today. Speaking of which, it's important to remember that BTC has the longest and most proven track record of any coin or token. This makes it the safest crypto to hold on a relative basis. Although it's likely that others will someday have the same safety status, it's impossible to ensure which ones. So if you prefer not to take the risk of holding on to an altcoin and seeing it stand the test of time, consider allocating to the original crypto that will someday become the world's reserve currency. It sounds crazy until you realize that central banks will start accumulating BTC in 2025. And you can find out more about that in the description. And that is all for today's video, folks. So if you found it helpful, smash that like button to let us know. If you want to make sure you keep getting helpful crypto content, subscribe to the channel and ding that notification bell. And if you want to help others understand what's going on with alt season, why not share this video? As always, thanks for watching, and see you all in the next one. This is Guy, bidding you goodbye.
After last month, massive solar flare added a 25th hour to the day. Businesses are wondering what should we do again
at the White House. Anything can change the world. From HR to payroll, ADP designs for the next anything.
Let's scramble this, shall we?
Oh yeah, that's better. Apartments.com.
Yo, what the fuck is he doing, bro? Damn, these niggas is fuckers.
Please just knife yellow badly.
5 seconds, baby.
What the fuck was that?
Enemy smoke turret active.
And you're not in the Terminator? I'm gonna hit you up.
And that's how I've been able to travel the world and trade full time for the last 2 years. Because I started trading with the strategies that were proven to work and just copied what the pros were already doing.
Gentlemen, I'm going to go a bit light on the jokes in this video because the coins I'm about to talk about, the pump I see coming, the move I think is about to be made, could happen as soon as tomorrow, could happen as soon as next week. This is extremely urgent. And if you don't catch this move, if you are still sidelined at this point, this is the point where you start entering the phase of the bull run where you are too late. You are entering or having to enter at massive risk. And the gains you're going to see, you're not going to see these incredible gains unless you take some crazy trades. This is your last chance to avoid that, which is the #1 thing you have to do if you want to have success in crypto. And like I said, this is extremely urgent, which is why I'm not doing jokes. I'm not going to do some big overproduced video. Actually, what am I talking about? The quality of content on this channel is dog shit. We all know it, but let's act like it's not. I'm not going to make one of those because I need to get this to you now. Look, if you're watching Bitcoin cross 100K right now, you're probably on YouTube bouncing around thinking, what's next? Or you're digging around thinking you have to ape into some meme coins or some bizarre projects right now before it's too late. And what is next is very clear. And getting into these new hypey, crazy little project pumps that are going on right now, I think they will continue to do well this room, but it's not the move right now. And what we're looking at right now, I haven't been this confident since I was last November. And if you were with us last November, yes, we've been making content this entire time in the last 4 years. I pointed out Bitcoin was entering a bull. It's time to buy low caps and mid caps and altcoins. If you look at the prices of all those coins right now, they're up 5 to 10x now, entering the bull run and about to do their next leg up to do another 5-10x. This is the thing we've been playing for, the thesis we've been going after for years on this channel. And I think very strongly that move is about to happen right now. And everyone's going to absolutely hate this move because everybody's going to be offside to this. Nobody's looking at this right now, and everybody's busy messing around in meme coins. Now, I'm not here to hate on meme coins. Do your thing. However, what no one is expecting, and the move I think is about to happen, is the boomer move. The move in boomer coins. All the old classic vintage coins. On top of this, in this video, I'm going to break down some of the sub coins, the smaller coins, that are going to move extremely hard. I'm talking 5 to 10x's very quickly due to this move. And a lot of things that are hyped in crypto right now that you're probably hearing about, everybody's texting me about meme coins right now. They're sitting at massive hyped up prices. Well, the value of these things are in the dumpster. And the reason why everybody is going to hate it is everybody is involved in all these hypey things going on. And then these things are just going to move. They're going to skyrocket. It's going to catch everybody offside. And again, I feel the same exact way I felt last November. The risk is a little bit higher than it was then, but if you're going to catch this bull run and you're going to lock in and get a good position where you can sit on it for the rest of the bull run, that being an immense profit entire time, so it comes to the hold, not having to take these high risk trades that everybody killed. This is the chance to get it. After this, the bull is in full swing, and I think we'll make it very clear with the charts and everything I can show you right now. And like I said before, I think due to this rumor move coming, we're going to see a sudden point that I'm discussing in the video. We're going to move turbo hard. The boomer coins are going to move, and then these coins underneath them are going to go into massive speculation as everybody and tons of institutional money rolls in. And it's all going to start moving these coins especially hard. There's so much money in the market right now, so few of these coins, and money flows in. So without further ado, I think I've talked this up enough. One thing I'm going to tell you right now, follow me on Twitter at ZSSBecker because I talk about these videos and everything I'm saying much sooner. I don't make like one of these videos a week. On top of that, if you're looking to get into the meme coin I'm dropping, which I know a lot of you are, the hype on this thing is already getting a little bit silly. All the details for that on my Twitter too. Speaking of which, this video will have the first cipher, the first puzzle, as well as information on the drop date and time, all presented in a non-clear way to with your mind. And I think it's funny. So without further ado, let me show you what I'm looking at right here. Let me show you what I'm talking. Just also before we continue the video, please read the disclaimer below. I usually make a 2-minute monologue. Okay, so I don't want to waste any time in this video. Please read it. It's personally run by me. It's extremely important. Crypto is extremely dangerous. Please read this great disclaimer in the description.
This holiday at T-Mobile, families can save 20% every month versus the other guys. So check out the savings calculator to find out how you can save. And for more holiday cheer, get the Samsung Galaxy S24 on us.
I dare you to let me build you a completely free e-commerce store preloaded with 20 handpicked products that are trending all over the world, basically validated by AI from a trending product database, one of the top vendors. And the reason that we can do this completely free for you is because, well, Shopify is paying me to do it. You've probably seen me before, because for the last year, Shopify has loved the AI-paired software that we built so much. They've been paying me to build people just like you, complete beginners, a completely free store. Now, again, it's free for you, right? Shopify is paying me a commission to do it. And if you don't keep your store for more than 90 days, I don't even get paid. But your store is still free, right? And after 90 days, it's still your store. I don't own a percentage of the store. I don't control the store. It's yours. You can delete products from it, add new products to it, all that good stuff. It's your store, okay? Not only that, I'm going to give you my courses completely free. I'm not going to try to upsell you a bunch of courses. I know you've seen gurus trying to sell courses for $1,000, $2,000, so on and so forth. I can afford to give you my courses for free because, again, Shopify pays me when you use this software to open up a Shopify store. You get a free store, right? I get a commission from Shopify, and Shopify gets a new merchant to their platform that's being trained by me. It's a win-win-win situation. All you have to do is click here right now. I dare you to do it. I dare you to see if it's free. You're going to go to the next page. You're going to create a free account. You're going to get a free account to our AI software that's going to build you a store in the next 20 minutes, ready to start taking orders. The sales pages are going to be done. The product descriptions are going to be done. The products are going to be uploaded to the store for you, ready to go, ready to start taking orders. The custom theme is going to be uploaded with banners for you. It's going to be ready to go. Weeks of work, thousands of dollars worth of time done for you, all by AI, completely free. The only thing that you have to do is create your own Shopify account. Again, the reason I'm able to do this for free is because Shopify is I'm awarded as the most innovative commerce coach in the world by Shopify. Shopify follows me. They like a lot of my ads. And this is something that Shopify is 100% aware of and loves. That's why they're paying you to do it. So you can go pay somebody for a bunch of courses. You can go pay somebody to build you a store. Or you can just click here and let our AI software build it for you for free. And you'll have an epic, professional, optimized store ready to go in the next 20 minutes. The choice is yours. But if you want to get started right now by the person that's awarded as the most innovative commerce coach in the world, that's going to give you courses for free, build your store for free, then you got to click here right now. Again, I dare you to do it. I dare you to see it's free. Not a dime's coming out of your pocket for my services. Shopify's paying you to give it to you. Let's go.
About. So look, the Bitcoin is sitting at 99,000. So this seems like an outrageously high price. Maybe it does to you. I don't think it is. In the context of everything that's going on in Bitcoin, if we look at the last run, if we look at how money is moving in, all the countries and institutions buying it, I don't think this is a high price at all. I think we have a way to run right here. But we're not going to make our money as Bitcoin. Bitcoin is more like 500 of crypto. You're not going to get rich doing it, but consistently buy Bitcoin over the long term. And it's consistently going to make you money. But this is not where we make lots of money on this channel. We're degenerates. We're here to gamble. What we need to understand is what Bitcoin is doing and how it relates to every other coin on the market and what it's going to trigger. So, the thing I want to show you first off is we need to go back and look all the way back to last run. And what I'm going to show you right here also is very similar to the 2017 run, which looks like a little ant bubble right here. So if we go look at last run, let's look at when Bitcoin really started to move. It did a huge move to 18,000 and just kind of hung out. And then it did another move to about 37,000. Clearly doubling the last all-time high almost. So the equivalent of this based on last run's top, which I believe was 69,000, we'd have to get to about 140,000 to even be in this zone right here. Okay, so we haven't hit this move yet. All right, this move has not come. This move from here to here. I think we are about right here on this. And you're going to think, oh, we can't just use the last run, whatever. It's lining up almost perfectly. It's getting weird. Now, what we have to look at is these specific dates right here. If we look at November 20th, 2020, and then let's look at 1/13/2021. Now, if we go look at the same dates on Ethereum, for example, you can see during this time, ETH did something similar to what it's doing right now, becoming extremely disappointing. Now, look, I hate ETH. I think it's broken technology, but technology doesn't really matter in crypto, okay? Just put all that aside. What matters is fundamentals and narrative. That's it. So you can see in this time frame when Bitcoin was doing that huge move, its first mega move right here in November, Ethereum wasn't moving at all. You can see Ethereum barely did anything. It didn't do a mega move or anything. It just kind of tapped up a little bit, kind of like we're seeing right now. And you can see when it went and did its huge move, similar to the move we're seeing in Bitcoin right now, this happened almost a month, 20, 30 days after Bitcoin did its first initial big move. So what are we seeing right now? We're seeing Bitcoin make a move very, very similar to this move right here. And what are we seeing right now? We're seeing Ethereum go and make this same kind of mini move right here. Okay, it's making this little mini pump right here. And I expect Ethereum then go and make its next move probably within 10 to 20 days of Bitcoin making this move right here. What I think is going to happen, especially if we overlay this with past moves, is Bitcoin is making its traditional first move first. And if you don't know, I talked about this a lot last video, and I think you should go watch last video too, because it covers the entire altcoin rotation and everything going on. But most people are super soggy on their utility in altcoins right now, but they're completely forgetting the traditional bull run equation is Bitcoin makes its massive moves, and only when Bitcoin starts to settle down do all the altcoins start to move. Until we see Bitcoin find a base, I don't think we're going to see that. Now, what Bitcoin is either going to do right here is it's going to settle around 95,000 or something like that, or we're going to pump straight past 100,000, probably hit like 110,000, and then Billy bobble around 110 to 95. This move right here is complete in my eyes. Then we're going to see this next move kind of shortly after. But what we need to focus on is when Ethereum does this. Because when Ethereum does this, this is where all of the boomer coins that I talked about are going to explode. So what are boomer coins? These are coins in crypto right now that everybody hates. Everybody is completely obsessed with meme coins and meme coins and meme coins. This is what drove Solana to create speculation. Put the fan app at the top of the app store. Everybody's working it. Get all over TikTok. Solana meme coins. Solana meme coins. And I get it. It's sexy. It's hot. I think meme coins are going to have a really strong place in the rest of this bull run. But it's not the place to be looking right now. I think we're about to actually see a total fashion, boring as traditional crypto moves, which is where the first thing we're going to see is we're going to see all the boomer coins start to move. This is going to be coins like XRP, which is starting to move super hard, but also going to be coins we're actually seeing to start literally right now. We're probably going to see, I hate to say it, I don't have any good cuckold jokes in the tank, I apologize. I know you guys want me to compare McDonald's with Chuck E. Cheese employees and talk about how much their wives cheat on them. It's funny, I get it, but I'm in a serious mood this morning. I don't have time to talk about how these guys live under a staircase like Harry Potter in their dark little dens collecting butt plugs. I don't have time for that today. This is a serious channel, we're talking about serious things. We're going to see boomer coins like Cardano, like AVAX, like Chainlink, like DOT, all these boring coins that nobody's invested in right now. We're going to see them all move really hard. And then people are suddenly going to get into crypto as a technology again. What is going to happen as soon as Bitcoin crosses 100K or when it passes, all the retail's going to FOMO in. And the thing is, making money in meme coins right now is extremely difficult. I know that might be news to you, but there's 50,000 meme coins coming out a day. Everybody's investing in it. Everybody's chasing it. I mean, you have messages about stuff. I don't know if this is the top for meme coins. This is definitely not new. The number one thing people do in crypto is they go, all right, this seems top. Where can I move my money to next? And I guarantee you, these people are not going to keep all their money in meme coins. Because the number one definition of all the money that's entered crypto recently and all the money entering the main coins right now is FOMO. They want to go where the action. That's the number one defining characteristic. And we're about to see all these institutions and big funds. Bitcoin's going to get to 110K, 120K, whatever. And in countries where not everyone else is going to start buying it, people are going to say, what is next? Where can I get similar Bitcoin-like gains? You have to understand these countries and institutions buying, they're not looking for 50Xs. They're looking for 3, 4Xs over the next couple of years. Where are they going to get that at? You're going to get boomer coin. Combine that with all that retail FOMO moving over, we're going to see massive pumps. And we'll suddenly start getting back into the technology narrative, which is, again, just like the meme narrative. It's just a story people tell themselves about why a coin is going to pump hard. None of these coins down here actually do anything in society right now, just like meme coins. It's all the same shit. You have to get that out of your head. So what does this mean for you? There's two places I think are going to pump super duper hard. There's actually three. Two of them are the most boomer, old school, vintage, 60-year-old alcoholic man who talks about Vietnam all day kind of coins. The other one's a little bit edgy that I'm going to get to in this video. I think that one's going to pump the hardest. So look, if I'm an investor here and I'm looking to make some money and take a position right now, what would I be doing? I'm going to give you 3 levels of degen right here. The obvious move is I think Solana is probably going to go to 500, 600, maybe 1,000. I had a really good friend of mine who's very smart and called this entire run since like $14 Solana. He got in at the absolute bottom. He thinks it's going to 2,000. We'll see about that. I think that's totally on the table, but like, if I'm waiting for a $2,000 Solana to be taking profits. However, what I would be doing right now is, yeah, you definitely want to have Solana in your portfolio. And yes, I think Ethereum is about to move here. Everybody hates Ethereum. It's been the most disappointing coin this entire run. But I'm going to tell you something. When Bitcoin was moving, make its move back then, everybody hated Ethereum too. And then it just does this crap. So keep that at your own caution. That being said, we're going to see all the boomer coins start to move. Now, I don't really hold any Ethereum. I don't really know about BNB because it's the old Solana. Last run, all the meme coins, all the crazy stuff was happening on BNB. That was its edge. Solana just beats it there, and I haven't seen anything cool happening with BNB at all. I think it's going to pump with everything else. I don't think it's going to do anything special, though. I think the coins that are going to pump super duper hard here soon is going to be Cardano. I think we easily go back to its old all-time high. It's going to be horrible. These people are going to get very loud again. It's going to be terrible. This is just something we accept is going to happen. I think AVAX is going to pump super duper hard. Now, we've been talking about AVAX since literally about $12 in November. This is just to give you context of the move I made in November. When Bitcoin was at like 7K or whatever, that's when I was like, okay, looks like the bull's back on. So that's why I told everybody to FOMO on the altcoins and midcaps. So for example, you see we almost nailed the absolute low on AVAX right here. And I think AVAX is about to make its big, big giant move. And I think we can easily go back to an all-time high in AVAX. So I think the boomer coins are just about to go back to their old all-time highs. We look at Chainlink, I don't know. Chainlink should be skyrocketing because it's the most useful coin in all of crypto. But like I said, technology, usefulness, actual fundamentals, that's boring. That's a butt plug covered in Tabasco sauce. Nobody wants to on that. It's like the third time I mentioned butt plugs on this video. They might be a trend. I think DOT's going to run really, really hard. And really, I think we're going to see Uniswap. I think we're going to see Polygon run really, really hard, especially with Polymarket doing so well. That narrative is just there. And maybe even some Arboretum. Now, I'm not really in on all these. My big bet here is just going to be on AVAX. I would also bet really hard on Cardano all day. You would split it across all these. It's fine, I guess. But I think if you get into, let's say, something that's going to pump really hard. So let's say we got like HBAR right here. I think HBAR maybe will do like, if HBAR does a 5x, AVAX is going to do 4x, and at that point, who cares? This is not where we're going to make the crazy gains at. If you're looking for the next big moves are going to be that everybody's going to be chasing in mainstream coins, this is where it's going to be at. I'm not really confident in meme coins. Now, I'm not the meme coin caller on this channel. I do think there's some really cool memes coming up, and I think there's some memes that are going to do very well. I think Peanut's going to do really well. I think a little horse coin underneath it named Cheyenne is going to do really well. I think Dogecoin and Pepe are going to do really well. There's this new coin come up here really cool called Shiro. I think it's going to do really well, but I don't think it's memes time to shine. I don't know if they're going to dump hard right here, and I think even if they do dump hard, they're going to come rocketing back as soon as this rotation's done, but I don't think this is meme coins time to shine. They're just too stretched out. The mini and liquidity in it is too thin. We're going to see people say, all right, I'm done gambling, and they're going to start rolling their money back in these more stable coins right here. Now, what do I think will pump as a result of this? If we're going to get boomerish here, this is where we get kind of degenerate boomer, all right? If we're going to do degenerate and boomerish, I think NFTs are going to run. Nobody's going to agree with me here, and nobody's paying attention to NFTs at all. But if you were on my Twitter, I pointed out like 2 weeks ago, hey, CryptoPunks are going to run. You should buy CryptoPunks. They were like $80,000 or something like that. Now they're at 130. There's only 10,000 of these things. They are by far the staple of who's cool in crypto. I'm an OG kind of shit. These are going to run, but other NFTs are going to run super hard as well. Fidenzas, Beeples, Bored Apes, maybe. I think the apes are getting their shit together. Pudgy Penguins. And of course, I'm super bullish on my project, Neo Tokyo. That's related to gaming, and I think that project is going to absolutely skyrocket as soon as the gaming world gets off. It's probably going to happen in 2025. I'm mentioning Neo Tokyo right now because everyone in the community is be like, why aren't you mentioning Neo Tokyo with all these other NFTs? And so I'm kind of just saying this to settle them down. These are boomer NFTs. These are like the art collectibles. I think the art collectible NFTs are going to do very, very well. Neo Tokyo is more like a community-based NFT where all the best investors in game investing come together. If you've seen the graphic, every single major gaming project is in there, and it's full of every single person that wants an edge is going to be crushing gaming. But that's a completely different type of group that's kind of more connected to the gaming goal line. So if you're watching this, you're inside Neo Tokyo. Very bullish on it, but I think it's time for the art collectibles right now. So am I saying if you're watching this channel, go buy a CryptoPunk? No, they're $130,000. Unless you're comically rich like me, you're not going to be getting one of these. That's fine. There are tons of ways to invest in NFTs. For example, a lot of CryptoPunks are tokenized. There's tokens tied to this. That's the CryptoPunks by buying one of the tokens. For example, a person gets like 40 of these things and it puts them in a wrapper, and there's tokens. And the tokens basically give you ownership to a percentage of those punks. Same thing with Fidenzas, which I think are going to start moving. You already see Fidenzas are already starting to pick up again right here. And so that's my first boomer thesis right here. If you look at apes and everything, they're all kind of showing these little hints of popping up. And I think once you start moving, everyone's going to FOMO back in them super hard because there's nothing that makes you cooler in crypto than having one of these OG art NFTs. Now, I don't think this is where a brunt of the amount of money is going to come in. You have to understand, very little money can move the NFT market like crazy. So if you're into that type of stuff, that's where I'd be looking. But the thing, or the place I think is going to move the most, is going to be AI crypto. So why is it? A lot of people are going to be asking, well, Alex, what about gaming crypto? You're really big on that. Yes, I am super big on gaming crypto. I think that's going to move super duper hard in this move as well. However, I think gaming crypto is very much more tied to adoption. Now, if you look at gaming crypto right now, Off the Grid is getting crazy amounts of views on Twitch. We're seeing a lot of games and gaming companies perking up their ears to NFTs and tokenizing their in-game assets, their money, currency in the games. I think in 2025, we're going to see the massive crypto gaming bull run. I don't think it's going to move on hype alone. The narrative in gaming isn't the hype right now.
long term, it is probably going to be one of the biggest and fastest movers in crypto because that's where mass adoption is going to occur. I think we're going to see that gaming bull run in 2025. I do think top gaming coins, while we're talking about them, are going to move really hard. I would definitely have a bag of Beam. I'd have a bag of Super. I'd have a bag of Echelon Prime. IMX, I think, is going to move turbo hard too. And I think these are kind of more fall into the boomer coin category that I mentioned before. These are all kind of boomer gaming coins that tie in the infrastructure of all gaming and provide infrastructure to tons and tons and tons of projects. And that's why I think they're going to do very well. So if I was going to throw anything into my bag on top of those boomer coins, that's what I would throw in there. Now, the thing I think is going to pump the hardest is going to be AI crypto. Why? All the hype and the hypiest ETH coins there are AI crypto coins. They are the perfect combination of narrative, actual investing, because if you've seen the video, you've seen AI in the stock market that's blowing up right now, actual utility, and then again, the hype narrative is just there. On top of mainstream adoption on these things being very, very close, and then finally, the fundamentals on these things. A lot of these projects that we're looking at right here have a fully diluted market cap and are sitting at like $20-30 million market caps. And so the amount of speculation that can go into these coins, on top of all the boomer coins moving and people suddenly thinking, oh, utility, technology, what's next there? This is where it's going to be. And the next place people are going to think of when it comes to technology is AI. It's the biggest story in the entire world right now. So what would I be throwing money at? Now, I don't hold either of these coins, Near or Render, but I think they're going to do exceptionally well and lead the run right here. I want a little bit more higher gains. I think Near, Render, BitTensor. If you're a beginner, I would just stop there. I'm not a beginner. I don't hold any of these coins. I think these are going to get very similar to AVAX games, maybe 50% more, 25% more. So I would throw these into that boomer portfolio I just talked about. I think Akash is going to do very, very well. Where I'm going to start at on this list is I'm going to start with Ayaz Network. This is the biggest small Bitcoin there is. Now look, I made an AI video a while back that explains the technology on why these coins are important and what they're going to do. I'm not going to make that video again right now because we'll add an additional 30 minutes to this video. We're just not going to do that. What you need to understand about AI coins is there's a few things that they do. They manage the processing of data, they manage the distribution of the power behind AI, the servers, the processing power, or they manage and distribute certain LLMs or bots or certain services in AI. And then finally there's DePIN, which really works more around decentralizing the distribution of AI power. So for example, to make that clear, it's the same problem we have with banks. For example, one centralized source controls all your money. You can turn it off at a whim. It's the same thing like your social media account and whatnot. The same thing applies to AI. Making AI private and anonymous is absolutely huge. So DePIN is this narrative that not many people are focused on right now that is going to be massive. And I'll be talking on that just a little bit in this video. So they fall into those categories. So AOS is one of the ones where it comes to processing power. I think this is going to move up to a theta market cap easily. And I think when these coins start to move, AOS is going to pump turbo hard. If I'm going to start anywhere with a more higher risk portfolio, that's what I'm going to be starting at. Echelon Prime ties into that. I don't know too much about Echelon Prime. To be honest, I know it's a tie between AI and gaming. I think the narrative and story behind this is phenomenal. Now, the coin I think is going to pump hardest in relation to its market cap. So this isn't going to be the biggest earner, but of any kind of big market cap AI coin that has a reputation, I think Destra is going to fly. I think it's easily a multi-billion-dollar coin. And here's what you're seeing in all the AI charts right now. So if we look at, you can see Destra's all-time high was 41 cents right here. And what we want to look at in these projects that is so good and is very common in AI that a lot of other spaces don't have is they have a fully diluted market cap that's the same as their market cap. This means there isn't any investors holding big bags waiting to dump on you. For example, if we go look at Illuvium right here, which I think is going to do well this run. I always pick on Illuvium for this. But when it was going up right here, about 90% of the coins were locked up. So we had all these investors that were in massive profit but couldn't sell their coins. And so this pump right here, only about 10% of the coins were available. And as soon as the coins started releasing on the market from investors, they all started selling and it smashed it down. This is really bad. It's not good in a bull run because it really affects the price because you constantly have another 10% of coins being released and then dumped on the market every other week. Most of these AI coins don't have this. Is what makes them really powerful. Now, we want to look for charts just like this. You can see Destra was sitting at 41 cents, and right now it's at 30 cents. Even in our entire bear market, it got down to 13 cents. Not really a mini bear market just recently. By the way, if you follow me on Twitter and YouTube, I was screaming at you to buy right here. I was also screaming at you to buy these type of coins right here. So like, I don't know, I think my screaming is kind of efficient. I'm throwing a tantrum on Twitter. Ears should perk up. But really, what we see right here is it topped at 41 cents and it kept popping up to 30 cents. And you keep seeing Destra trying to pop out over and over and over again, despite being terrible right now, despite utility coins being an absolute dumpster. Nobody wants to participate in any type of utility or any group of coins. It's all meme coins right here. So this is really, really important. Why? Climate for these is terrible. It sucks. No one wants to be involved in it. Yet we keep seeing it show tremendous strength. Now, if it's doing decent or good or showing strength in a bad climate, as soon as the climate shifts to utility and boomer coins, this thing's going to go absolutely crazy. Massive speculation is going to roll into this. And we're going to see tons of investor money and retail money combined flowing into AI coins, which means these breakouts right here, they're going to get accepted and they're just going to go. And then people are going to FOMO in the same way they're FOMOing in the meme coins right now because they think they're going to miss out. I think Destra, this chart right here doesn't just apply to Destra. Okay, this is across a lot of AI coins. We're going to see something very similar. But Destra by far has one of the best narratives for the thing that is going to run. Everybody's looking at this thing. Now, if we keep going down the chart, one I kind of make tongue-in-cheek is PAL. They made a really bad PR move recently. It took them from 30 cents to 15 cents. This could be an undervaluation right here. They could lead to massive gains. I think PAL, if everything's done correctly, is a multi-billion-dollar...
Ho, ho, ho. Stop waiting for holiday deals. Telemobile offers unbeatable savings all year round. It's time to say goodbye to overpriced phone bills and hello to incredible savings.